Here is the overview of today's gold market news. Gold price performance, price trends, and technical outlook. Uncertainty, tariffs, and the US dollar exodus reinforce gold as a trusted asset. Geopolitics shifting established trust and drive central banks toward gold. Let's look at the latest gold price performance, price trends, and technical outlook. The forecast for gold has been revised upwards from $2,750 to $2,950 per ounce. Currently, the spot price for gold is at $3,086.10 per ounce, up more than 3% on the day. Despite current high prices, analysts expect volatility due to global de-risking events and wealth destruction. Analysts anticipate the impending stagflation to slow economic activity with rising inflation. Stagflation is anticipated due to exhaustion in the demand destruction, and retailers will pass on prices to consumers. In the period from 2009 to 2024, gold was a top performer during stagflationary periods, increasing by 12.1%. Nevertheless, gold is facing selling pressure due to broader market deleveraging, caused by fears of a global recession arising from President Trump's sweeping import tariffs. Uncertainty in tariff policies will push inflation expectations higher. Despite the volatility, gold retains value, especially as central banks remain net buyers. Silver price forecast has been downgraded, with the new 2025 forecast being $34.50 per ounce, down from $36.50. The current spot price for silver is $30.41 per ounce, up 2% on the day, after a recent bounce from a 16% drop. The drop was brought about by the global market meltdown caused by President Trump's tariff announcements. The bounce is attributed to strong investment demand from investors. Silver is likely to remain in the $28 to $35 range. Silver could potentially reach $40 per ounce, hinging on the gold price outperformance and strong investment sentiments. These are contingent on the easier Federal Reserve policies and substantial reversal on the trade war policies and rhetoric anticipated at back half of 2025. However, weak industrial demand arising from global trade war concerns and U.S. tariff policies are currently hurting economic growth and demand. Gold to silver ratio has hit multi-year high, with the recent peak reaching the 5-year high of 105. Currently, gold to silver ratio is still elevated above 101, indicating that gold has significantly outperformed silver in recent months. Moving on, let's look at how uncertainty, tariffs, and the US dollar exodus reinforced gold as a trusted asset. Market concerns over US deficit spending, tariffs policies, and the US dollar reliability has created economic uncertainty. The tariff announcement solidifies the uncertain environment for hedges, defense, and safety, which will keep gold in play. In addition to the above, the volatility in the equity market has increased gold's appeal as a portfolio diversifier and as a trusted physical asset in uncertain times. Furthermore, the US dollar is no longer seen as a reliable reserve asset, whereas gold has preserved its value for thousands of years. Next, let's delve into the geopolitics shifting established trust and driving central banks toward gold. Central banks are increasingly turning to gold to diversify away from the US dollar to reduce exposure to the US dollar. Amidst the ongoing economic and geopolitical uncertainty, Trump's trade war has added to the rising distrust in the US as a reliable trade partner and hastened the rate of diversification. The Central Bank of Uzbekistan had sold 11 tons of gold in March 2025, repeating the trend of February sales. Year to date, their gold holdings have dropped by 15 tons to 368 tons. Analysts surmise the bank is likely taking advantage of high gold prices to realize gains or support domestic needs. The gold reserve of China's central bank, the People Bank of China, has hit record highs, with their latest purchase being in March 2025, amounting to 3 tons. This purchase marks the 5th consecutive month of purchases, following a 6-month pause in 2023. The central bank's year-to-date purchases amounted to 13 tons, with the total reserves being 2,292 tons. In US dollar terms, China's gold share amounted to 6.5% of the total reserve assets, up from 6.0% last month and 4.6% a year ago. This reflects China's steady strategy to diversify away from the US dollar. While much attention was focused on China's central bank purchases, the Polish central bank has emerged as the biggest gold bearer in 2024. In March 2025, their purchases amount to 16 tons, and their year-to-date purchases amounted to 49 tons, which is equivalent to 54% of the total purchases in 2024 of 90 tons.